You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Wednesday, September 5th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from CNBC.com. Weekly mortgage applications are stuck in a rut as rates rise. Home buyers and homeowners don't have much incentive to call a mortgage lender right now. Mortgage interest rates are stuck near recent highs and are beginning to rise again, further weakening home affordability. Those factors left mortgage application volume basically unchanged last week, falling 0.1% compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. Mortgage volume was 18% lower compared with the same week 1 year ago. Refinance activity continues to bleed because fewer borrowers can benefit given today's higher interest rates. Applications to refinance a home fell 1% for the week and were 37% lower than a year ago. Our second story today is from Yahoo Finance. Silicon Valley on Capitol Hill. What you need to know in markets on Wednesday. On Wednesday, Silicon Valley goes to Washington, D.C. Jack Dorsey, CEO of Twitter and Square, and Sheryl Sandberg, COO of Facebook, will both be on Capitol Hill Wednesday to face questions from lawmakers over the content and safety of their platforms. Earlier this year, Facebook CEO Mark Zuckerberg spent 2 days on Capitol Hill discussing Facebook's role in allowing foreign actors to present misinformation to users during the 2016 election. Dorsey and Sandberg will likely face similar questions about the ability of their platforms to ferret out propaganda and other coordinated campaigns. Our third story today is from investing.com. Bitcoin tumbles, Goldman Sachs postpones crypto desk. Cryptocurrencies were in the red on Wednesday amid reports that financial giant Goldman Sachs is retreating on its plan for a Bitcoin trading desk. The financial institution will instead focus on other projects, such as holding digital coins on behalf of large fund clients, but could look into a trading desk in the future, Business Insider reported. Goldman Sachs already participates in Bitcoin futures and contracts for difference, allowing investors to bet on the price of Bitcoin without actually owning it. As alternative cryptocurrencies have risen in popularity, many Wall Street companies are looking for ways to get into the bourgeoising field. But with Bitcoin down almost 70% since its peak of nearly $20,000 in December, that interest is dying down. Our fourth story today is from MarketWatch.com. U.S. trade deficit soars nearly 10% on record imports. The trade deficit soared almost 10% in July on record imports and hit the highest level in 5 months, keeping the U.S. on pace to record the largest annual gap in a decade. The deficit climbed to $50.1 billion from a revised $45.7 billion in June, the Commerce Department said on Wednesday. Economists polled by MarketWatch had forecast a $50.4 billion gap. The U.S. trade deficit added up to almost $338 billion in the first 7 months of 2018. That compared to $316 billion in the same span in 2017. Imports rose 0.9% to a record $261.2 billion in July. U.S. imports have surged in 2018 largely because of rising demand for oil and higher prices for petroleum. But Americans have also bought more foreign autos, computers, and pharmaceutical drugs. Exports fell 1% to $211.1 billion, though they are also near a record high. In July, the U.S. exported far fewer passenger planes and soybeans. Soybean exports are still up sharply from a year earlier, however. Many foreign buyers sought to lock in prices and beat pending U.S. retaliatory foreign tariffs by obtaining them earlier. And that, ladies and gentlemen, is news you can use for today, Wednesday, September 5th, 2018, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.